I want to share some thoughts and things I've seen working quite good for many manufacturing companies to accelerate their business innovation and change. I want to share that with you. So my name is Jan Verveen. I'm the co-founder of More Momentum, which basically is a consulting and training company on business innovation and change management. And we work with forward-thinking, forward-moving manufacturing companies who indeed want to accelerate their business innovation and change and make it a kind of continuous change at a higher pace. Before founding More Momentum, I have been in manufacturing and service in manufacturing for something like 20 years, predominantly as a consultant helping manufacturing companies to develop their and advance their service strategy, develop service offerings, service sales and marketing, and our company, consultancy firm, also helped companies in developing their processes and delivery capabilities. So that's Noventum Service Management, which I was part of for a while. In the meantime, just before raising More Momentum, I also did some research in understanding better what do the very successful manufacturing companies who are quite dynamic in changing and adapting new models and advancing their service business, what do they do different than the many others who are kind of stagnating. And from those findings, I will not go into all the details but take out some snapshots which are kind of interesting for the IoT domain. So based on that research, I do speak a lot in conferences and write articles, working on my next publication, which is hopefully going to be ready early 2018, about how to thrive in a disruptive world. So basically, I think in the whole manufacturing sector there are a lot of opportunities, much more than just being smart in how we help our clients to maintain and serve and use our equipment and machines. And the key question is, how are we going to pursue them? So just like a little context, what we do see is that the world is changing a lot. So we used to be kind of agricultural economies, and then we became product manufacturing economies, and we now see that a lot of economies in the world are basically service economies. So 60, 70, 80% of the gross product of the countries, these economies come from service and not from manufacturing or products or industry. Not all countries in the world, but it's really moving fast. And of course, like we've been talking a lot about today, connectivity, data, algorithms, artificial intelligence, virtual reality, a lot of new technologies which are enabling a lot of new capabilities, new models, but not necessarily are the value propositions in itself, but they really drive a lot of change, and it's going quicker and quicker. It's not only manufacturing which is changing a lot, so we see a lot of new companies coming up in our economies which are by DNA, in their DNA it's all about data, algorithms, and massively, and they do a lot of, well, let's say strange things, but very disruptive things. And so all the examples we've been talking about, like Airbnb or Uber, Amazon, Google, they're all data algorithm companies, and that's their core business, that's their DNA, and they're finding more and more areas where they can be relevant with their capabilities and their offerings. And so I can imagine that for manufacturing companies and the whole manufacturing sector, actually one of the key challenges is what is going to be the position of the industry, of the manufacturing in this competitive game. Are we just going to be pushed back as just manufacturing the equipment and let other companies do the smart data value things? Or are manufacturing companies actually going to be much smarter and comparable to the data-driven companies and take that space as well? So that's the line here. Is it going to move to the right or is it going to move to the left? I think our mission should be it's going to the left. But it's not per se by itself the case. We have to work hard on it and we have to innovate hard for it. And so one of the guys I've been spoken with in a company in mining equipment, they are quite successful in developing their business, in developing their service business and all other areas of the business, and they're quite happy with the speed of change and innovation. But on the other hand, he very clearly says, but compared to our competition, we're doing quite a good job. But compared to these new entrants, data companies, we're far behind in our pace of speed and innovation. So this is our challenge. And it's not easy. If you just look some statistics of the last decades, whereas early 20th century, it would be easy that the life expectancy of a company would be something like 75 years. At this moment, it's just 15 years. A company just exists for 15 years on average. So we also see that something like 25% of the companies we knew about 15 years ago, they have disappeared. So we know, of course, the Kodak and Nokia, those kind of companies, but who knows Tandem? It was a major IT company, computer company, I think 15 years ago, they're gone. So this is also part of the game. And something else to add to this, in some research it appears that actually very few companies in general, not only manufacturing companies, they are struggling to kind of keep on being successful and growing and profitable. They do it for a while, and at some point it goes down. So very, very few are able to kind of have a sustainable growth and profitability. And it's all about adapting continuously. So what we found actually with talking with 89 companies and doing the survey with them is that whatever you talk about, what kind of business challenges, and whether it's service, IoT or something else, that everything boils down to three key problems, which cause them to stagnate and ultimately disappear. Is that change always goes slow. Whatever is big change, small change, it tends to go small. There's always reasons to have resistance. It means a lot of energy goes into the resistance and then also fighting and overcoming the resistance. And that the companies are kind of stuck in business as usual. So if there's change and improvement, it's actually always incrementally improving what we already have. Products become a little bit smarter, a little bit more reliable, a little bit more efficient, a little bit more cheaper to produce, easier, better selling, slightly better services, uptime, etc. It's all incrementally improving what we already have and not taking bigger steps for future success. And then thirdly, on all different levels in the organization, whether it's the CEO, the service director, the R&D director, or a supervisor, they see the opportunities, they see the threats, but they also see the slow progress. This is frustrating, and then the question is, okay, what can we do different to change that? An interesting case, which really is a dilemma for innovating our business models and our service offering, our value offerings and proposition, is this example. So this is something early 1900s. All the excavators were for the heavy industry and mining, etc. They were all cable driven. So all the arms were moved and driven by cables instead of hydraulics. And the name of the game there was every year 10% further reach and 10% more kilos per scoop. That was the name of the game. And then the first hydraulics appeared, but they were small, not suitable for this big equipment. So they had some eyes on it, hey, but potentially this is going to change the game. But on the other hand, they tried to put hydraulics in these big machines, but the customers were simply not interested. They don't like it. They don't see the value. So they said, no hydraulics. It doesn't make sense. So then there were a few small companies. They started making these very small excavators for around building construction and houses, etc., mobile, and it made sense at that time to have hydraulics in it. But these companies, they were growing quickly. The hydraulics were being more mature, so they became more reliable, the more weight, more reach. So these pumps, so how far can they expand or collapse again? And at some point, they came in the same neighborhood as these cable-driven excavators. And then all of a sudden, something happened. All the clients were interested in hydraulic excavators and not anymore in hydraulic, because the name of the game was not anymore further reach and more 10% more kilos, because they were accelerating quicker in it. Now all of a sudden it became about safety and reliability. So not a single company manufacturing these cable-driven excavators survived this transition and became all new companies. There were a few who were buying these hydraulic manufacturing companies and trying to put it into their machines, and it failed. So, and in the end, they invested it again, this hydraulic company, and leave it completely ruined, of course, because they made just a mess of this company, which potentially could have been successful. So this is one of our dilemmas on how can we really make some bigger steps in innovating. And I think one of the key challenges here or things we are struggling with is we cannot predict the future. Like Dan already said, you will have some things which may not work as well as you thought, so you want to try and fail. But this is maybe even a bigger magnitude. We don't know what our clients will want and desire in 5 years or 10 years, and we're trying to develop new offerings for them with IoT. So one of the strategies here could be more accurate in predicting and being very clear, okay, this is what we're trying to deliver as a kind of new service value proposition. These are capabilities we need to develop. Instead of being very accurate or trying to be accurate in these predictions, maybe it's a better option to understand that there are more options, and the more options we will explore and develop and try and test, the bigger the chance is that we also will have those options with a good outcome. Which means you need to have different initiatives in different directions and find a way how you can handle that management and finance that. And this is the theory of optionality. Then another thing to keep in mind that we have quite a few different ways of looking at different types of innovation. This is just one of them. We can have a look, okay, are we talking about internal capabilities or more about value propositions? You need to innovate both. You can have incremental improvements on both of them, gradually, slightly improving what you already have. Always important, will not bring you really to the future. Maybe better innovating in adjacencies, which means you are taking bigger steps of what you already can do. So you can add a capability and develop new offerings with that new capability. Or with the current capability you have, add a new offering or an additional offering and see if it works. And if you have a kind of high pace of this, so then you are making bigger steps towards a direction, but it's still related to what you already are doing. It's adjacent to something you already have. But it can go quite quick. And then more radical, where you say, okay, but we're not just going to make a big step from compared to what we do now, because we have envisioned that this is going to make sense, and that's more radical, more risky, and occasionally it makes sense to do that. And where does typically the disruption happen? Really in new value offerings, in more radical or the fast pace on adjacency innovations. And for sure, your capabilities have to go along, but they will only have real impact if you have a new value offering. Another point is we typically tend to sell capabilities. We try to sell connectivity, we try to sell remote services, we try to sell product features. But they in themselves don't have value, so clients won't buy it, they will start resisting it or expecting lower prices. So if you say with remote connections we can be quicker, we can be more accurate in what kind of resources to send out, what kind of parts we need, then your client will say, okay, that's good, so the price will go down. Able to trying to innovate value instead of just making it cheaper. So what is really the value you're trying to deliver with these kind of capabilities? So Internet of Things is not a value proposition, it's a capability and can drive a lot of new value propositions and new business models, but we have to start thinking about the value propositions as a leading, guiding principle in our innovation. So we tend to be too much inside out. We can do something, let's see how we can develop something great and push it out, and then be a bit frustrated that the clients don't like it. But that doesn't mean that we always just have to ask our clients what they want, what they need, and make sure that way we innovate the right things. Because like Henry Ford already said, if I would have asked my customers what they would like to have, they would have said faster horses, and they got in the end something else. So we have to have a deeper insight in customer needs now and in the future, more insight than our customers have themselves, and start developing in that direction. And still keep in mind, we don't know for sure, so we need different options, different attempts, and for sure something good will come out of that if we are able to manage that. Then another thing is collaborative innovation, so involve clients, already mentioned quite a lot. Go deep into their challenges and the problems in their operations, do investigations and help them to raise more insights in their own problems, etc. That will help you in two things. You are more accurate in developing something they really are going to need and want to pay for. And the other thing is probably it's not only your own company which has to make a kind of transition, also your clients need to have a transition. They start using more advanced solutions and services and offerings of yours, so they have to start rethinking, adjust their operations, adjust their business, and you have to give them lead time to kind of evolve as well. So if you take these innovations with your clients on board, better chance of good outcomes. I would say don't forget future needs, future clients and future partners. Just to keep in mind this example of the excavators. If these classical excavator companies would have allowed to innovate hydraulics and not making it relevant for their current clients but other clients, they would have made a good business of it. And then probably, because now in hindsight you can say, well, for sure they could have integrated, but at that moment you wouldn't have known. But then they would have two different businesses, cables for the big ones, hydraulics for the smalls, serving different clients, different markets, see this developing, and at some point you can have the option, okay, are we going to integrate, yes or no? So don't be too blindly focused on your current clients and their needs and the current market segments. Have a wider perspective on it. So maybe part of your business model, a new business model, is addressing other clients with other needs. You have to be open to that. Then another message what I would like to share with you is, and also that can be linked to this excavator problem, is if we tend to integrate two different offerings, two different kind of models or capabilities, you run the risk is that you're ruining both of them. At some point you're addressing different clients. At some point you have a massively operational lean and mean system and then a very innovative system. It's different attitude, it's a different dynamics in the teams. So if you and I would be working in this operational game where I have to do exactly what you say and we're hitting targets and safety, etc. And then in another initiative we have to collaborate together and being creative and accept mistakes, that's a bit awkward. So I have to adjust also my behavior between team members in the different, that sometimes doesn't work. And it particularly doesn't work if the difference in dynamics, in relations, in type of people, type of work habits are massively different. So as an example, what did Cisco do a couple of years ago? They said, okay, we really want to accelerate our service and solutions business compared to our product, and they made a complete different business unit of it. Because it's a completely different game. BMW, they were trying to develop the hybrid cars, but hybrid is completely different thinking about drivetrain and energy than the traditional designers were doing. So BMW designed the whole car, but this hybrid system, they kind of put it away. So not hiring some consultants to help them, just outsource it. Now this is a small thing, so it's just having design and then it's back into the same car. But for Cisco, it took a while before they started integrating. So that's what you kind of see here, that it at some point makes sense to say, okay, we have an operating system which also has to be dynamic. They have to adapt to change, a more incremental change, more into the adjacents, next steps, innovations. But at some point it becomes too awkward to have it into the same organization and then have a separate organization which is working on the innovation. And then you can even think of, okay, but hey, if we have a good initiative here which really doesn't fit in, for example the hydraulics compared to the cable-driven excavators, make a different business unit or just leave it and has that kind of incubator organization. So these are some thoughts to think of if we look at our business innovation and trying to make something good from IoT. So in the end, bottom line is that we need some richer portfolios of our innovation initiatives. And we can think of, and it's not just one is right and the other is wrong, we need a mix of these. So you can think of different innovations which are more into the adjacent approach, next box approach, and also have a few more radical initiatives. Do you want to be really the first mover who is the first in the market with this new idea and solution, or do you want to be an early adopter? Either way, you have to start working and preparing and innovating your capabilities and your offerings now, because if you just wait till the first movers are successful, you can't be an early adopter anymore. So you have to prepare for it. But anyway, you can have either choice, but be deliberate about it and maybe have a kind of hybrid model in it. Also think on where do you develop capabilities and where are you developing value offerings. So developing capabilities in IoT makes perfect sense, because one thing I think we can be pretty sure of, there will come something out of it, some sort of value offerings. So we need to have these kind of capabilities of understanding data, turning data into value, etc. So work on those capabilities, but also work on, okay, and what kind of different models and value propositions can we make of it. So following needs or driving needs, I did hint a bit on it just now. So instead of just listening and understanding the needs of your clients and come up with the right value propositions, there's also another strategy which you can follow. And this is actually, I think, what Apple did. They didn't listen to the clients, to what they would need. Steve Jobs had an opinion what people were going to need. And of course, he had a good vision for it. Afterwards, it was easy to say he did, because he was successful, but he had a kind of vision, and he was kind of imposing this into the market and creating that demand and creating that desire that people started wanting what he was delivering. So there are really two different approaches: getting towards your client or let your client come to you. What do we see different with companies who are more innovative and changing and adapting quicker? Is first of all, they have a very clear perspective that people do drive change. People don't resist change. And let's be honest, the only reason that the world is changing so quick is because people are embracing new capabilities and possibilities with new technology. It's not technology which is changing the world, it's just enabling it. People embrace it, start living different, start working different, and that's driving the change. So why could they not change quickly as an employee of a company? They can. The other thing is, instead of pushing harder and faster work to improve profitability and reduce cost or drive revenue, it's more about how can we drive the development of more capabilities. So how can we create a very fit and healthy organization which is ready to perform and will perform? There's a different way of doing any kind of intervention if you have a performance issue. It's I would need this result and I don't care how. You're going to work harder and faster, even more so if I have some high incentives on you. Well, if you say, hey, but this is not working, why? What should we do? Or how can we solve this problem at the first source? And who has to be involved? So develop the capabilities. And the third one is, if you want to have future success in a changing world, we have to change our business models and our status quo. That's a given. So as soon as you hear any signs, hey, but this is not how we do it, it's a sign that this perspective is not alive in the company. And you see that in the very fast-moving companies, this is really the modus of the guiding principle. Then you also see 4 different habits. First of all, very briefly, the company has a very clear and compelling direction of where they're heading. What direction? It's not very specific in detail, but it has some concreteness. It is compelling, people can follow it by the head and heart, they like it, it triggers pride, but there's also some explanation of what's going on in the outside world and why is that a reason that we should change in a certain direction. If that is clear, people are going to be eager to change. Dialogue, continuous dialogue on all different levels and all different functions. So that we don't have silos which are drawing up the borders to kind of isolate themselves. Less conflict of interest. Important thing here is our performance management systems with our targets and the incentives. This is typically creating a conflict of interest, and these things have to disappear to be very agile and innovative, because keep in mind that every big change doesn't only involve servers or only sales or only R&D. It's everybody in the same boat, and we have to collaborate in it. Decision making much more lower in the organization, there where the action takes place. So it's a typical combination of kind of top-down overall strategy and roadmap, which is also an assignment for every team to develop their own strategy, how to move into a certain direction to make things happen. And a discovery, which is a kind of ongoing exploration of what's going on in the outside world. Not only by your market intelligence group or your strategy team, but everyone. Service engineers, they're with the clients, give them 5 to 10 minutes to talk with the clients about their business, their challenges, and what is going on the last week. And then they will have much more visibility of what's going on with clients, and then they will also have a better understanding why we're changing things. And if they also have a better idea what other companies are doing, what Google is doing, and how that potentially can impact their business. Our company doesn't have a gate around it that we're safe from any trends around, so let them know what's going on in the outside world by partly discovering it themselves and sharing it with each other. So, in summary, be aware of the dilemma, develop both the capabilities and the value propositions, think in options, not in very accurate predictions, increase the momentum for continuous change, and have a rich and diverse innovation portfolio. And once you have that, then you indeed see that just as the other fast-moving companies, that they actually are adapting and thriving. So in the end, we believe that actually it's all about people. It has been said before, it's about empowering people, empowering talent, developing them, and making sure that they're part of the business innovation. If we bring those two together, then really the magic happens, which we're looking for. So I think we all have the opportunity in this room with our colleagues to create our future as a manufacturing in this data and service-driven economy. Start creating developing our value propositions and capabilities of the future. And after all, this is mission critical. If we don't do this, at some point we are one of those who's going to disappear in 15 years. So as Malcolm already mentioned when he introduced the roundtables, it would be good to write a few action points before you leave here or during the discussions. What I would hope that you will take with you and act on in, let's say, next month, is to have a kind of review on the innovation portfolio of your company, or at least in your domain where you're working on, and try to assess them along the lines of just shared with you, but there are many more frameworks to kind of categorize innovations. Try to do it. It gives you a new perspective on what you actually are doing and focusing on putting your energy in, and if it makes sense. And also review on what kind of strategies you're following for those innovations, and then see what kind of new opportunities and new things you can change. And 2018 would be a great year to start doing a few things different. And don't wait too long for it, because these are good ideas we have learned here, but everything you delay something or procrastination is one of the enemies of successful innovation and speed and change and momentum. So, if you think it's all about Internet of Things, connectivity, data, algorithms, privacy, etc., I think we've missed the point. I think it's actually all about having momentum for the future as a manufacturing companies, solving meaningful problems, being more relevant for clients in a broader sense, and make sure that manufacturing is a strong backbone of our economy here. So that's about it.
Yeah, thank you, Jan. We do have time for questions, actually. So if anybody, yes.
So, have you done some analysis, or maybe your thoughts on, you showed in one chart the radical first mover and the radical aspects which are required vis-a-vis the more adjacent or early.
Ugly.
Sorry, yeah.
Did I say ugly?
So,
yeah.
So in that, I want to know, both these approaches. Do you have a view of private companies or the startups vis-a-vis the public-funded companies, which tend to be governed by the quarter pressures, shareholder expectations? Because I'm thinking, on one hand you have startups which are innovating fast. All these examples of Uber and all, they were startup in one point in time, no pressure, and they could take radical steps. Or you have, high valuation companies like Google, who can start up a separate company around autonomous car just by 1% stake. Whereas traditional companies, like even if you take Dell, which is in the tech company, has to go private because they wanted to make some radical shifts. So are you seeing this? And if that's the case, manufacturing is largely public. Does it pose a challenge for the manufacturer?
In general, I think you hear a lot about there's a big difference between small companies and big companies. And I think that in general is a misconception. I've seen many small companies being just as stuck as big companies And I've seen big companies being quite agile and innovative and changing and reinventing themselves like small companies. So I don't think that that is necessarily the difference. For sure, public companies, they have pressure on shareholders, but you know, most of the shareholders are institutional investors. So they don't expect you to deliver all the results now. If you don't deliver the results, then you might have a problem. But you can come up with a strategy and a vision and a journey where you say, hey, but we see these trends and this is our future and this is how we're investing and this is how we're mitigating risks. And you will get your shareholders along. And maybe those shareholders that don't like them, well, let them buy other shares. Get them out of your shareholder meeting. And you see some companies where the board is quite strong and opinionated and leading their shareholders. So it can be done. So at some point it's just an excuse to say, hey, but our shareholders expect this. Then on the other hand, you also have family-owned companies, and they are just much as pressure to deliver results as the public companies. So, you know, I think it's all over the place in that sense. Another point you mentioned, the startups, of course, that's a different game. They start to exist for this new thing which they hope will work, and that's the only thing they're working on. So they play the game like Russian roulette or something like that, everything or nothing. And Tesla is still doing it. And they are big. But they are just following and pursuing this vision, and if it doesn't work, okay, it didn't work. So he can make choices which are much more radical and bold, and also invest much more, as long as he has funding for it, by the way, and he gets it. Much more bold than your company probably can. But that doesn't mean that you cannot be agile, innovative, and have a healthy portfolio of innovations, including some radical steps. Does this answer your question?
Yeah, it does. Yeah.
Yeah? Thank you.
Any other questions? Yes, Sean.
Thanks. On that slide that you had earlier about disruptive innovation, I'm sitting here thinking, are the manufacturers actually best placed to do that with IoT? Or is it going to be something like a system integrator plus a Google that comes in and grabs that?
Yeah.
I even see problems with GE struggling with some parts.
No.
What do you think?
Well, this is part of the crystal ball and looking in the future. I don't know what the answer will be. If we talk 5 or 10 years later, then probably we will know. I do think that, let's say, the system integrators and the data-driven and algorithm companies, that they have a stronger starting position in these kind of capabilities. And I'm also not even sure if the fact that you are doing the IoT on your own proprietary equipment will really be a sustainable protective mechanism to keep these system integrators out. So I think we have to be careful, but it's also a choice we have. So time will tell. I do think that if we don't do anything as manufacturing companies and just focusing on delivering the equipment, then we will be even more commoditized than we are now, because the only value we deliver is having these factories which are making machines, and we can sell them to the system integrators or other parties who are going to provide that as a service, and not you as a manufacturing company. So I think this is one of our battles at the moment.
Breaks.
Okay, thank you very much.
Thank you very much.